Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone. In this video we are going to start this chapter, Departmental Accounts. Now this chapter is very simple chapter and it will probably be in your first sem or second sem depending upon your universities. This chapter is a very short chapter, right? There is very little to concept over here, and also there are not much types and no methods, only one, okay? Only one method, one type. It's very simple chapter. Now see, to understand the concept of this departmental accounts, let's start off with an example, okay? Let's say there is one hypermarket called ABC hypermarket, okay? ABC hypermarket. Now when you go to this hypermarket, what you will see is you see different sections, okay? Different sections. You may see a footwear section, right? And then you may see a garment section, and then you may also see an electronics section, okay? Electronic section. So there are a lot of sections over here. Let's say there is stationery section. So all these different sections. All right, so now these sections are called what? These sections are called as departments, right? We all know that different departments. These sections are called departments. Now here in this chapter, what we are going to do is we are going to do accounts of these departments, okay? These departments accounts we will do separately, okay? That's the main thing over here. What we are going to do, we are going to find out profit or loss made by each of these different departments. That's the main objective of departmental accounts. Now how we will do that? That's the main question, right? How are we going to do that? See, it's very simple. How we used to do it in 11th and 12th standard, how we used to do before to find out the profit or loss of a whole business. Same thing we will do over here. We are going to do what? We all know that, right? To find out profit and loss, we do trading and P&L account, right? We do trading and P&L account to find a profit or loss made by the businesses. Now the same thing that we are going to do over here, we are going to do trading and P&L account, and the only difference would be that this trading and P&L account will have lot of columns. Will have what? Lot of columns. Now you think, before we used to do the trading and P&L account of one entity, one business, yeah? Now here we are going to do trading and P&L account of lots of departments, right? So the variables are lot over here, right? Different departments. So we are going to have lot of columns, okay? So we are going to call this trading and P&L account as columnar trading and P&L account, okay? Columnar, because it will have a lot of columns. See, I will just show you the rough example over here. See, it's gonna be like this. See, trading and P&L account, right? Trading and P&L account, it will be same, nothing difference. See, the only thing that will be there is columns. All right, let's say A column, A department, B department, A department, B department. That's all. Same thing will happen. We will close off the trading account, and then we'll transfer here the gross profit, and then at last we are going to do this, and then we are going to find out the net profit. Same thing, okay? We're going to do the trading account, then the P&L account. Simple. But the only big thing in this chapter, the only big thing I will tell you is allocation. Now what do you mean by allocation? See, I will tell you over here what I told you. Allocation. Now what do you mean by allocation? Allocation means appropriation. Allocation means appropriation. Now what does appropriation mean? That's distribution. Simple, right? All these are synonyms. Allocation, appropriation, distribution. Now what will happen in this chapter is, see, now here what we are going to do, we are going to find out the profit or losses made by each of these departments. So they are going to give us information. Now what we need to do trading in P&L account, we need sales, we need purchases, we need all the expenses incurred by the businesses, yeah, by the departments over here, and everything we need, yeah, incomes we need, expenses we need, purchases, sales, yeah. So all those will be provided to us. But the only problem here is, here there are lots of different columns, yeah. So the purchases will be of A and B. Purchases will be of A and B, and the sales will be of A and B. So all will be separate over here. We have to make them separate. See, the thing is, purchases and sales will be given to you separately. Okay, this department has done this much purchases, this department has done this much sales. All those things will be given to you, but some items will not be given to you separately. Okay, some items will not be given to you separately. Some items will be given to you as a whole. They will just give directly. They will say Fred 1000 rupees. Now how are you going to allocate 1000 rupees between these guys? What is the basis? How are you going to allocate? How are you going to distribute between these two departments? Yeah, that's the important thing over here. That's allocation. Okay, so keep that in mind. How to distribute expenses, that's important over here. Now I told you the objective of preparing this. Now the objective of doing this is to find out the profit or loss made by each of these departments. Now the management wants to know, right? The management wants to know what is the position of these departments. Are they making profit or are they making losses? If they are making losses, then they can drop the departments, or if some departments are making profit, then they can expand them. So all these are the basic logic behind the departmental accounts. All right, so this only trading and P&L account is there. Only one method, simple. You just have to find out the profit and losses made by these departments. And the only thing important over here is the allocation, how to distribute the expenses and incomes. Okay, I will show it to you. I will show you the allocation. All right, don't think this chapter is very tough. No, this chapter is very simple. All right, just the thing that you need to be careful is allocation. That's it, because we are preparing trading and P&L accounts since 11th standard, right? So it's very simple. Now we will see the allocation, how to do the allocation. All right, now let's see how to do the allocation of expenses. Okay, how to distribute the expenses among various departments. Now see, allocation of expenses is the most important thing in this chapter, and it's also very simple. It's also very easy if you understand the expense. Okay, if you understand the particular expense given to you, then you can easily do the allocation of that expense. Okay, the thing here is that you need to know why that expense is incurred and for whom is it incurred. If you understand why is it incurred and for whom is it incurred, then you can easily do the allocation of that expense. Okay, see, here it is the list. In every book there is the list. Okay, in every book, in your books also there will be this list. So here in this list you can see the expenses are on the left side and the basis on the right side. See, all the expenses will be allocated with the help of these bases. Okay, different bases. We will calculate the ratios of each of these bases, and based on those ratios we will divide these expenses among various departments. Okay, we will see that in the next video when we do the problems. All right, but here I want to explain you about the expenses and the bases. See, now most of the students, what they do is they try to memorize this list. Okay, they try to by heart this list, but that's not very good. Okay, because if you try to memorize this, then in the exam mostly you will forget it. You will probably forget it. Okay, so don't try to memorize. It is very simple. This list is very simple. You don't have to memorize. You just have to understand the expenses. See, let's see these expenses. Now first here we have purchase expenses. See, now purchase expenses, whenever we purchase something from any seller, we have to incur some expenses. See, if you are buying something, if you are living in Bangalore and you're buying something from Delhi, what you need to do? You need to pay for shipping, right? Yeah, of course you need to pay for shipping. So that's what is happening over here. Purchase expenses. So you might have to pay freight, you might have to pay carriage inward. In the business you have to pay carriage inward. Now what is meant by carriage inward? Carriage inward means the shipping charges paid to bring that good to your place of business, to your factory, to your showroom, to your business. Okay, that is what is meant by carriage inward, coming in. Okay, so it is directly connected with purchases. Okay, coming in. Opposite to carriage inward, here we have carriage outwards. Now what is meant by carriage outwards? Carriage outwards means going out. Okay, outward shipping charges. You are sending something out from your business. Okay, when do you send something out from your business? When you sell something, right? When you sell something, you send it to your customer, the item. So that is what is meant by carriage outwards. Okay, so carriage outward will be directly connected with sales, and carriage inwards will be directly connected with purchase. Okay, and don't worry, purchases and sales will be given to you in the question. Okay, purchase of each department and sales of each department. Let's say, for an example, purchases of department A, B, and C are given to you as 5,000, 3,000, 2,000. Then you can easily find out the ratio, right? Slash the zeros. 5,000, 3,000, 2,000, right? Slash the zeros. 5:3:2. So easily you can calculate the purchase ratio. Okay, same with the sales ratio. You can easily find out the ratio of all these bases. All right. Now what I want to tell you is these expenses. See, freight is there, carriage inward is there. All these are connected with directly. They are connected with purchases. Duty. Now what is duty? Duty is paid on the international borders, right? Whenever you bring something from abroad to India, then you have to pay import duty, right? So that import duty is an expense, right? That import duty is an expense. On what? On purchases. You purchase something, you are bringing it to your country, and you have to pay the import duty. So that is an expense. So it is directly connected with what? It is directly connected with purchases. Same with octroi. Octroi is like a local tax. Okay, so that local tax is also connected with purchases. And discount received. Now discount received is like an income or gain to us. It is a gain to us, right? We are receiving the discount whenever we buy something, whenever we purchase something, then we may get discount from the seller. So that discount is a received discount, right? So it will be directly connected with purchases because it happens only when we purchase something. So connection is directly with purchases. Then here we have sales expenses, advertisement. Now why is advertisement done? Why advertisement expenses are incurred? To increase the sales. Simple. To increase the sales. So it is connected with sales. Carriage outwards, I told you, to send something out. Out means sales. So outward shipping charges, so that will also be connected with sales. So sales ratio. And then we have discount allowed. Now what do you mean by discount allowed? Discount allowed means discount has been given to the customer, right? We gave 100 rupees off to the customer. So that is what is meant by discount allowed, and that is an expense to us. That is an expense for the business, right? Discount allowed. And it is done on sales, right? You sold something to your customer which was priced at, let's say, 1,000 rupees, and you sold it to 900 rupees. Okay, that is what is meant by discount allowed. Bad debts. Now bad debts. Now why bad debts happen? Because you sold something on credit, and your debtor to whom you sold goods on credit, he didn't pay you, right? He promised to pay you in future, and now he is gone. Now he is gone. So the debt is gone bad. So why is it happen? It happened because you sold goods on credit. Yeah, sold. So it is directly connected with what? It is directly connected with sales. All right. Bad debts happen if you sell goods on credit. If you don't sell goods on credit, bad debts will never happen, right? So the connection is directly with sales. So sales ratio. Sales commission, you can understand. If sales commission is given in the question, then you can easily identify sales commission, sales ratio, sales manager salary, sales ratio. Simple. Provision for discount on debtors. See this. Provision for discount on debtors. Now what businesses mostly do is they may create a provision for discount on debtors. Okay, so now this is also directly connected with sales. Now debtors. Who are debtors? Whenever you sell something to your customers on credit, then they become your debtors, right? So debtors are directly connected with sales. Okay, it is not connected with purchases. Whenever you purchase something on credit, then they become your creditors, and here it is debtors. Okay, with sales it is debtors. So the connection is with sales. All right. Okay, so these all are sales expenses, and these will be allocated with the help of sales ratio, and this will be allocated with the help of purchase ratio. Simple. Done. Okay, next here we have fixed expenses. Now see, the fixed expenses are expenses on land and building. All right, like rent is there. Rent will be distributed with the help of space occupied ratio. Okay, how much space have been occupied by each department, it will be allocated like that. Okay, simple, right? Rent, you are paying for the space that you are living in. I'm giving example about you. Okay, so rent. So the department also, they have to pay the rent. The business has to pay the rent, but the departments, It will be allocated to the department based on the space occupied by each of the departments. All right, and rates and taxes also the same thing. Now the municipal taxes are also paid on the building, right? So the municipal taxes will be paid by the business, but to allocate here we have to take space occupied ratio. All right, because the taxes on building, so building means what? Space occupied. Whenever the building will come, land on building, always try to remember this, space occupied. Okay, it's simple, it's connection. Okay, then you have heating and air conditioning. Now see, heating and air conditioning expenses, first priority for these expenses you have to give to light points. Okay, light points will be given to you, light points or some units will be given to you. If light points or units are not given, then you have to come to space occupied. Okay, but the first priority you have to give to light points. All right, okay. And then here we have expenses on machinery. See, now the machinery will have some expenses. Depreciation is there. Depreciation what? Depreciation is what? Depreciation is a loss, right? It's an expense. So depreciation we have to distribute on the value of machineries held by each department. Okay, so you have to create the ratio. If the machinery, one department has, let's say, 1 lakh, another has 2 lakh worth of machinery, and another guy has 2 lakh worth of machinery, then 1:2:2. Simple. So like that. Okay, then repairs. Now there will be some repairs on machinery. Now the repairs also on the value of machinery is held by each of the departments. Same with the insurance on assets, insurance on machines. If there is any insurance on machines, the premium is paid and one whole amount is given to you, then you have to distribute it. Okay, simple, value of machineries. Next you have here expenses on electricity. Now this is same thing. Okay, heating and AC is the same thing. Expenses on electricity, lighting and heating. See, here also the same thing. Meter readings will be given to you. If meter readings are not given, first priority is to meter readings. But if meter readings are not given, then go for light points. If light points are also not given, then go for space occupied. Okay, that's why I wrote over here in space occupied, heating and air conditioning. All right. So priorities are there. Okay, priorities 1, 2, 3. Remember that. Then here we have insurance expenses. See, first we have insurance on stock. Now stock words comes, right? Stock word is coming over here. So simple. How much stock is held by each of the departments? Based on that, you have to divide that insurance premium. All right. Next here we have insurance on building. See, now insurance on building. So building means what? I told you, building means area occupied. Okay, space occupied. So on that basis, you have to divide that insurance on building. So area occupied. Next we have insurance on plant and machinery. That is value of machinery. How much machinery is being held by each of the department? On that value, on that ratio, you have to divide that. Insurance on plant and machinery. Then you have welfare expenses. See now, welfare expenses. Now these welfare expenses are incurred for labor. Okay, incurred for employees. Now first we have canteen expenses. Now canteen means what? It is employee, for employees, right? Canteen, they eat from canteen. So number of employees in each department on that ratio. Now this will be given to you. Most of the information, these information will be given to you. Okay, you don't have to find anything. Meter readings will be provided, light points will be provided, space occupied will be provided. So all these will be provided to you. Number of employees in each department will be provided to you. You just have to find out the ratio and you just have to distribute the expenses. So here also you also have the labor welfare expenses. That's also employees. All right, and then you have power. Okay, so power for machinery and everything. So that power will be distributed through the horsepower. Now the horsepower units will be given to you. So on those units you have to distribute power expense. All right. So these were the expenses we have to distribute with these basis ratios. Okay, it's very simple. You just have to understand these expenses. It's very simple, right? You understood, right? Purchase expenses, sales expenses and everything. And I need to tell you that will be some expenses which you cannot allocate. Okay, there will be some expenses like goodwill written off. There may be goodwill written off. Then there will be preliminary expenses written off. So some expenses will be there which you cannot distribute. Okay, which you cannot distribute because these are organizational level expenses. These are what? Organization level expenses, and these expenses cannot be allocated to any of the department. Okay, like interest received and like debentures. Okay, debenture interest, all these will not come into the departmental trading and profit and loss account because these are not possible to distribute among the departments, and these are organizational level expenses. There are more, okay? We will see this in the while solving problem. We will see this while solving the problem. All right, so now you understood, right, the basis for allocation of the expenses. It's very simple, okay? All right, now one more thing I need to tell you about is interdepartmental transfer. Now what is meant by interdepartmental transfer? See, it's very simple. Let's say there are two departments, A and B, okay? So what happens is, in interdepartmental transfer, by the sentence only you can understand, there will be transfer of goods between the department, okay? Let's say the A department send goods to B, okay? So now the sending department will consider this transaction as what? As sales, okay? Because the goods are going out from his department, okay? And the B department, the receiving department, will consider this transaction, this happening, as a purchase. Simple. Here sales and here purchase, okay? Because here it is coming in, the goods are coming in, so it will consider this as purchase. And here you have to credit and here you have to debit, because we always debit the purchases and we always credit the sales, okay? And this interdepartmental transfer can happen either at cost price or at selling price, okay? We'll see both the cases later in the problems. And whenever it happens at selling price, the thing is, here there will be invoice price concept, okay? Cost plus profit, right? That is what is selling price. So here it's a little bit difficult, okay, not much. And cost price, there are no adjustments required, so it is very simple. And in most of the exams, the questions will be based on cost price, because if they give on selling price, a little bit extra time is required, right? So mostly they will give on cost price. And this is very simple. You just have to debit one posting and here you have to credit one posting, okay? A and B department, only that much. It is very simple. We saw the concept of departmental accounts, and then we saw the allocation, right? Allocation is also easy, so this chapter is very simple and easy, okay? So you have to score good marks in this chapter, because this is one of the easiest chapter from financial accounting, okay? In the next video we will solve some problems and we will see how to do departmental accounts. All right, so don't forget to watch the next video. Okay.